Okay, it looks like the number of people joining is starting to settle out, so I'm gonna go ahead and get started. Good afternoon, everyone, and welcome to today's webinar. My name is Megan Peasley, and I am the Iowa SourceLink Program Coordinator at the University of Northern Iowa's John Papachon Entrepreneurial Center. I'm excited today to start our 2025 Iowa Tax Webinar Series. We work with the Iowa Economic Department Authority to bring the Iowa SourceLink platform to all business owners. Whether you're looking to start, grow, fund, or even exit your business, Iowa SourceLink is here to help you. We provide step-by-step guides, we make helpful referrals to our nearly 400 partners, and house the business license information center. We also have the pleasure of presenting these webinars in partnership with the Iowa Department of Revenue. In today's webinar, Nick Belkey, Harry O'Neill, and Matt Bishop will be providing an overview of the Iowa sales tax requirements as they relate to the construction industry. Before we get into that, a few housekeeping items. Today's webinar is being recorded and will be available within the next week. You'll receive a link to today's recording in the same email that you will receive as proof of your attendance. The slides for today's webinar have been shared in the chat, and you should be able to see them. Connor, Chanel, and I will be sharing other resources and contact information if and when they're brought up during the webinar in the chat box, so make sure to keep your eyes on that. And then please enter any questions that you have in the Q&A box, which is located in the bottom half of the screen. We do ask that you focus on asking general questions that will apply to everyone. If your question is specific to a situation, we recommend that you talk to the Department of Revenue directly. We are going to hold off on answering any questions that come in to the very end. And with that, Nick, Terry, Matt, I'll let you take it away.
Thanks, Megan. I will kick us off. I should be sharing the slides on my screen. Somebody please let me know if that's not working. Welcome, everybody. This is our presentation on sales tax basics for construction contractors, which cover the construction industry and landscaping. This is our general disclaimer that we have. You can read it in full if you like. The purpose is to say that this is an informal presentation. Nothing in here is binding, and if you want some sort of binding guidance on you, please contact us and we'll do our best to get that to you. Here is a little bit about the department, our mission statement, vision and values. Just letting you all know that our mission is to serve Iowans through the responsible collection and generation of revenue to support the public good. Here are the goals for what you can expect to learn over the next hour or so. Identify and describe different types of contractors, demonstrate difference between taxable and exempt purchases of materials, supplies, and equipment, differentiate between repair and new construction, identify and describe a designated exempt entity as it pertains to the construction industry, and identify and describe taxable versus exempt landscaping and other lawn care services. I'm going to start you off with a few basics for sales and use tax permits and filing. To begin with, who needs a sales and use tax permit? Anybody with some sort of nexus in Iowa must register for a permit. By nexus, we mean physical. Your business is located in Iowa. You send employees into Iowa either to do work or just to deliver things. If either that applies, you need a sales tax permit. Or even if you're based out of Iowa and you never have any employees come into Iowa, if you make $100,000 a year in sales into Iowa, you still need a permit. And you'll need to collect sales tax on your sales in Iowa and pay any use tax that you might owe on your supplies. You can get a permit if you don't have one by using our web portal, GovConnect Iowa. The address there is govconnect.iowa.gov. This is kind of a one-stop portal for all of your tax needs. Hopefully, most of you are familiar with it. You've used it for all your various tax purposes. You file your permits. The frequency is if you have at least $1,200 in sales tax in a year, you file monthly. That return is due on the last day of the month following your sales. So your sales in July, those will be due to be filed we're in the current month of June, sales in June. That return is due by the end of July. If you have less than $1,200, you can file annually, and those returns are due uh, at the end of January following the year. We also have a seasonal filing option if you have at least $1,200 in sales in only 4 months of the year. That's appealing, like I said, if you're a seasonal business, like a lot of lawn care companies might be, you only have sales during the summer months. Uh, if you have a monthly filing obligation, you're expected to file your return every single month, even if that's a zero return, to tell us, hey, I had no sales in this month. If you don't do that, we're probably going to estimate a return for you and send you a bill, and then you'll need to contact us to get that sorted out. New this year is an electronic filing penalty. For a couple of years now, all returns are required to be filed electronically through GovConnect Iowa, GCI. Starting July, there's going to be a new penalty associated with that. Uh, we cannot accept returns that are filed by paper beginning in July. Uh, so you will need to file those returns electronically through GCI. If you file a paper return, we may not be able to process it. We may not even know we've gotten it. And in that case, once again, we might send you an estimated billing and you'll need to contact us to get that sorted out. So like I said, starting in July, hopefully everybody's already filing through GCI, but if you're not filing through GCI yet, please get that sorted out and start filing in GCI. Or we do have exceptions for people who are unable to file using GCI. And you can contact the department for more information on any sort of exception. So getting to the specifics on sales tax issues for the construction industry, we'll start. What is a construction contract? Construction contract is an agreement between a contractor and a supplier, wherein the contractor agrees to provide labor, materials, and supplies and equipment to build a structure for the sponsor. A bit of a term of art as far as exactly what a construction contract is versus other types of business that contractors may do. We'll get into a little more detail on that a little later. Construction contracts can have lots of forms. There might be lump sum, cost plus contracts, or time and material. All those would be a construction contract. What sort of services might you see with a construction contract? All sorts of services. You can see examples there. Other examples, I don't know, roofing, shingling, glass repair, electrical, electronic installation, all of that we'd consider uh, potentially associated with construction contract. The difference there is a lot of those services are going to be taxable if it's not associated with a construction contract. So you see like electrical repair right there. If you're just doing a repair job and not all the way up to construction, just a smaller project to repair somebody's electrical wiring, whatever, that would be a taxable service of electrical repair. At that point, you would be charging sales tax on your electrical repair service. If it's a bigger job, you're doing some sort of electrical installation. Maybe you're installing the whole, installing wiring for a whole new building. That would be an exempt service of electrical installation. So you got a difference there between your big projects that would be associated with new projects and your smaller jobs that might be associated with repair. It's a bit of a term of art, can be difficult to tell what's construction, what's a smaller repair service. We have examples in our rules that talk about what might be a construction activity associated with new construction. You can see the examples there: central air conditioning installation, drapery installation, water heater installation, softener installation. Those are the kind of things that we would consider to be bigger jobs, would be called construction. No tax would be due on the service or material to the uh, to the to the property owner at that point, the sponsor of the contract. Instead, you would be paying sales tax on your materials. When you purchase your materials, you would owe sales tax on that, but no sales tax would be due on any sort of services that you'd be doing on these bigger construction jobs. We recognize 5 different kinds of contractors: owner, contractor, contractor, retailer, retailer, repair person. Those are highly fact specific. when you start your business, we ask that you select one of those classifications and pay tax, collect tax according to that classification. If you do change at any point, you decide your business has changed, or you just decide one of these classifications isn't quite right for you, we ask that you contact us and let us know. If you just kind of start changing the way that you do your taxes without letting us know, that might trigger some notifications to us. We might start asking questions, maybe send you out a billing saying, hey, looks like you're not doing your taxes right anymore. We want to avoid that. The first type of contractor is what we call an owner. That would be you own the property where the construction is happening. You're the one who's performing the construction, or maybe you're acting as the general contractor. Uh, the point is that you're doing your own construction. Your sales tax responsibilities there are that you are the user consumer of the materials, so you pay tax on your materials. But like I said, if it's a new construction, there's no tax due on the services associated with that. Next classification is as a contractor. These are maybe you're operating out of your office, your home. You don't have any sort of showroom. You're contracted just to do construction work. There, if you're performing new construction, then you do not collect any tax from your customer. If for new construction, again, you would pay sales tax when you purchase your materials, but there's no tax due on your contract with the owner of the building. If you're repairing, like again, something smaller project or repair or installation that doesn't involve one of those taxable services, then you would collect tax on your labor and materials from the customer. But if you're not performing any sort of taxable service, if you're doing something outside of the taxable services that would be associated with construction, gosh, having trouble thinking of something off the top of my head. But if there's no taxable service involved, then obviously you're not collecting tax on your service charge. Our third classification is kind of a hybrid between contractor and retailer. These are businesses that have their own storefront. Maybe you have a showroom, you'll sell materials to other people. Maybe you'll also do construction or repair work for the customers who walk in. There, your sales use tax responsibilities are to you buy your inventory tax-free for resale, and then you got to keep track of what you use in your construction business. You would pay sales tax, actually it'd be a use tax where you'd have to go back and keep track of your sales. You'd pay use tax on those supplies that you use in the course of your construction work. Then you would keep track of what you do for repairs. You would collect sales tax from your customers on those smaller projects, those repairs. You'd also collect sales tax on your sales of the supplies that you have in your store. You do not collect sales tax on sales to exempt customers, or anything that you pull out of inventory for out of state, or anything that's associated with new construction. Our fourth category is as a retailer, like a hardware store, that kind of business where maybe you're not performing a lot of labor. There, you need to have your sales and use tax permit to collect sales tax from all your customers. You sell to contractors, or maybe owners, or maybe just individuals who are doing something around the house. You're making retail sales of those building supplies. You collect sales tax from your customers, and you can purchase your inventory tax exempt. Any sort of supplies, equipment, services that you use in the course of your business, then you would have to pay sales tax or use tax on those supplies. Fifth category is as a repair person. You're not a contractor who does new construction. You're just doing those smaller repair jobs. Like I said, again, you'd have to look at your contracts and your businesses to decide how big your jobs are. If it's mostly repair, you can register as a repair person. At that point, you're charging sales tax to your customers. You're charging sales tax on those building supplies and your services if you're doing any sort of taxable service. And again, a lot of repair services are taxable. We have examples of repair services, fixing broken windows, fixing roof shingles, fixing a kitchen faucet. All those would be repair jobs. If that makes up the bulk of your jobs, then you would want to be a repair person. You want to try to collect sales tax from all your customers. Then we have a bonus classification for manufacturers. Maybe you're building supplies. You manufacture supplies for others in the construction industry. There, you're making retail sales to your customers. You would collect sales tax from your customers, and you would your materials are used in construction purposes. So you'd be making retail sales to yourself. Sorry, I've got to backtrack a little bit. You would owe tax on those materials that you're building. And that would be considered a sale only if the contract is performed in Iowa. Difference between manufacturer and contractor. Sometimes there are some quirks in there. If you're a manufacturer, but you wind up doing some construction jobs too, then you would need to pay use tax on your materials that you use in your construction job. That tax is computed on the fabricated cost. That fabricated cost would include materials, labor, transportation to and from the plant, but does not include installation on the job site. So that fabricated cost is kind of a complicated analysis. You can contact us for more information if you need help putting that together. What else do we want to cover there? Really want to emphasize if you're doing jobs outside of Iowa, a lot of these tax obligations don't apply, at least to Iowa. So if you're a manufacturer or a contractor and you're selling to people out of state, you would not owe tax to Iowa on those materials, but you may owe tax to that other state where you're doing jobs. So you need to be aware of your rules in the other states and just keep that in mind if you do jobs across state lines. Next slide, I'm going to hand it over to Terry for his part.
All righty. Thanks a lot, Matt. I'm going to share my screen. Just a second here. All righty. Hopefully everybody, can you see my screen, my slides? All righty. Matt got us started here, and I'm going to take over for the next section. I just want to talk a little bit about building materials and supplies. And just a couple things here. You'll notice it says Appendix B. Appendix B is from our publication for construction contractors. And I do want you to note that we are currently reviewing that. So just keep that in mind. The department is updating that publication, but you can still find materials and supplies. They'll still be in Appendix B. Another thing to point out to you as well, if you can see the little writing down in the lower right-hand corner of these slides, it does have the Iowa Administrative Code section that applies to the topics that we're talking about. So that's something, if you ever look at our legislative website, you can look up and see what the Iowa Administrative Code says on these topics. So just wanted to throw that one out to you. There are some codes listed on most of these slides down in the lower right-hand corner. A couple things, I think most of us would understand what building materials are. These are materials that are begin as tangible personal property, such as we've got some pictures here. It looks like some plywood and also some bricks. They're tangible personal property when they're in this picture. We can pick them up, we can move them, we can carry them around and stuff. When we are finished with them, they are incorporated into real property. So they are now, instead of being a brick, it's going to be a part of a building. So again, building materials become real property once they are used in a construction contract. Building supplies, this is anything that can be used or furnished directly in carrying out the work. some examples of that we have on here. Again, asphalt could be bricks, fencing, floor coverings, other than carpeting. We'll talk about carpeting a little bit later. I also like to think supplies could be something such as maybe caulking materials. While it's not a material per se, it's not like a brick or a 2x4 or something along that lines. It's still something that is used or consumed in the construction process. So just something to keep in mind. Building equipment. Again, Appendix B refers to our publication, which you can find on our website. Building equipment, I think there's some good illustrations here in this slide, but I like to refer to them as the tools of the trade, things that a contractor would use for performing their work, for performing a construction contract. And some examples are shown on here. This is something, it doesn't get used up in the performance of the construction contract. It doesn't become a physical part of the construction. In this situation, the contractor, who's ever acting as the contractor, they have to pay the appropriate tax on these things when they purchase them. Okay, there's not an exemption in there for contractors to purchase their tools and equipment that they're using on jobs tax exempt. So just keep that in mind. Make sure you're paying tax when you buy these things. Something to add to that too, you did notice the last slide potentially, I also mentioned there is sales tax, use tax, excise tax as well. This excise tax on machinery, I don't know if you're familiar with this or not, maybe some of you are, but certain construction machinery and equipment are subject to a 5% state excise tax instead of the sales and use tax and the applicable local option sales tax. That's what the LOST acronym stands for, local option sales tax. So what are some things that are subject to this 5% excise tax? Well, self-propelled building equipment, and it looks like we've got a track backhoe here in the illustration. That's a good example of self-propelled building equipment. There's also pile drivers, motorized scaffolding. Those are things that could be subject to this 5% excise tax. Also auxiliary attachments, which improve the performance, safety, operation, or efficiency of this equipment, and replacement parts for this equipment. All of these things could be subject to the 5% state excise tax instead of the sales or use tax and local option sales tax. Again, those rates are 6% or 7%, depending on whether or not there's a local option sales tax included. But this equipment is only a 5% state excise tax. I don't know if any of you do any work for farmers, specifically grain bin installation or grain bin construction. Just wanted to make sure that everybody is aware of this. And this is, I can't believe it's been around this long. It seems like this just started up just yesterday, but it was July 1st of 2019 that grain bins, including the materials and replacement parts used to construct or repair a grain bin, these are exempt from sales tax. Again, you can read up the applicable Iowa code and the administrative rule on that, but these materials are tax exempt. So what does that mean when you're going to build a grain bin for a farmer? You, the contractor, you can buy these materials, not pay sales tax on them, construct the bin for the farmer, and there is no sales tax due from the farmer either, because this would be considered a construction contract or new construction. I did mention a little earlier, I was going to talk about carpeting again. I was going to mention about carpeting a little later. Well, now is a little later. Carpeting is considered to be a sale of tangible personal property. It is not a building material. And some of you may be going, well, geez, how is that different than if I put down hardwood floors or I put down linoleum or I put down some other type of floor covering besides carpeting? Well, it may not be different to you or me for practical purposes, but there is a specific exemption in the Iowa code for this. So that's why it's exempt. Carpeting can be purchased for resale, but again, if you're the carpet contractor, you've got to charge tax to the final consumer, to the customer, unless, of course, the customer is tax exempt for some reason. But if any of us, if we were getting new carpeting put in our living room at our home, we hire a carpeting contractor to do the work for us. They will purchase the carpeting materials, not pay tax on them. When they come to our house, they will put the carpet in, and they will charge us the applicable tax at that time. One thing to note, that carpet installation is not one of our enumerated services. So since installation, carpet installation is not enumerated, it is exempt from tax. I did mention here other floor coverings. You could have maybe some hardwoods, you could have some vinyl, linoleum. There's all kinds of products that are out there that are not carpet. If these things are basically a fit to a specific room and they are permanently attached, and I don't know, I've got my air quotes out here for permanently attached. What's permanent, right? I mean, you get a big enough hammer or a bulldozer or a sledgehammer, you can remove something, but it's not intended to be removed. If you get linoleum laid in your kitchen, that is intended to be there permanently. You're going to destroy that if you take that out in most situations. So again, these things are considered to be building materials, and they are treated as any other building materials used in a construction contract, which means generally the contractor has to pay tax on those items, on those building materials. There are some exceptions coming up here in just a little bit for the designated exempt entity, but we'll touch on that here in a few minutes. If the floor covering is not attached, I'm thinking like a throw rug or something. Maybe you've got a mat just inside your door, so that people can wipe their shoes off or things like that. That's tangible personal property. You can roll that up and you can take that out. Doesn't hurt it at all. Doesn't destroy anything. That's just a sale of tangible personal property. That's subject to sales tax unless it's purchased for an exempt reason, such as for resale. I just wanted to expand just a little bit. Matt touched on this earlier in his section when it comes to taxable labor. And Iowa does tax certain labor for Iowa sales and use tax purposes. Okay. Now, the way that this works is all labor and services are exempt from tax unless they are enumerated in the Iowa code. What does that mean? Well, in plain English, that means if it's enumerated in the Iowa code, it is specifically listed as a taxable service. Some examples related to the construction industry, and again, Matt mentioned some of these earlier, the electrical and electronic repair and installation, plumbing and pipe fitting, painting, papering, and interior decorating. Those are all taxable services. One thing I want to clarify for you, though, while these are examples of taxable services related to the construction industry, they are exempt if these services are performed on or connected with new construction, reconstruction, alteration, expansion, or remodeling. Just to give you a quick example of this, if we were going to build a brand new house, okay, new construction, no question there, new construction, and the electrician is going to come in and wire up your brand new house, okay? Electrical repair, electrical installation is a taxable enumerated service. However, since it is on or connected with the new construction, reconstruction, alteration, expansion, or remodeling of a structure or real property, that means it's not going to be taxable. So hopefully that example helps make that a little clearer for you. Again, services connected with the construction, not taxable. Again, and this is just to reiterate what I just said. Taxable services, again, they have to be enumerated services. Generally, if it's a service that's used to repair tangible personal property or real property, taxable. Again, installation services involving enumerated services, that's going to be taxable as well. Not taxable, as I said just a moment ago, services that are performed on or connected with a construction contract. Also, services performed on or connected with remodeling, reconstruction, alteration of a structure. So just reiterating what we had discussed further. A couple other things to think about when it comes to taxable labor. Some other factors that we look at as the department, an example of that would be the timing, if the service is close to or near the construction. And an example that I always like, if somebody has a lot, has some bare ground, maybe it's not bare, maybe it's not level, maybe it's got some trees in it and such. And if you decide, hey, I'm going to build my new house on this lot, you have to have an excavator come in there and level the lot, clear the trees out, whatever's needed to be done in order for the construction to get going. So in that situation, they go in and they level the lot so it's ready to build on. That is obviously, if the contractor is waiting to do the construction, obviously that is something that is going to be connected to the construction. That's going to be exempt from tax. But if you decide, well, I'm going to knock these trees down because I may want to build something here someday, that's probably not going to work because it's not going to be considered connected to the construction. So if you're doing some excavation like that, the construction had best be in the plan, and it should be starting in a reasonable amount of time before it's going to get the exemption. The physical relationship, as for what's going on, a couple of different examples here. This one and also the final one, they're both construction and repair. Perhaps we'd take a look at if you're remodeling your kitchen per se, and while the electrician is there, you'll say, hey, while you're here, can you put up a new ceiling fan up in my kid's bedroom that's upstairs? That has nothing to do with the construction. So electrical installation to put in the new ceiling fan, that would generally be a taxable situation. And so, again, we are looking at that. The construction part of it, the remodeling part of it, that's treated one way. The electrical installation on something that's totally not related to the remodeling or construction, that's going to be treated a different way. The multitude of the service, and Matt mentioned this one earlier too as well. One of our taxable services you'll notice is roof repair, and that is a taxable service. What we are going to look at in this situation is if you're going to go up and you're going to replace an entire roof. After your roof has been around so long, you just decide we've got to do a new roof here. We're starting to get some leaks and such. That's generally going to be treated as a construction contract. If something is treated as a construction contract, that means there is no tax on the labor. Another thing that could be going on with shingles, we've had a lot of wind this spring. It sure seems to me anyway we have. Perhaps you've had a few shingles blow off in a windstorm, and you need to have that repaired. They're going to go up and they're going to put on a few squares of shingles. That's a-okay. Nothing wrong with that. That is probably going to be treated as a repair. You're not replacing the whole roof. You're not putting on a new roof. You're not doing something major, a project like that. You're just simply fixing up an area that had a problem. So again, that's what we mean by magnitude of the service. If you are replacing items, this is something that we look at. There are examples in our contractor's guide that's available on our website, but an example of that, perhaps you've lived in your house for quite a few years and you've got an old furnace in there. The old furnace is working. It's maybe not the most efficient, but it is working. It's not broken. It heats and cools. It heats your home. I know furnaces don't cool your home, but in a situation like that, if we decide that, hey, I want to get a more efficient one, I'd rather replace this under my terms as opposed to waiting for it to break in the middle of winter, and then we'll have to maybe replace it later. So if you're replacing something that is in working condition, such as a furnace, okay, you want to get a more efficient one, that's generally going to be treated as a new construction or a reconstruction type of project. If your furnace breaks down, though, if that thing all of a sudden it's not doing its job and you call the repair place to come and look at it and they say, boy, the age of this thing, you might be money ahead if you simply replaced it. So you decide, yep, that sounds good. I'll just go ahead and replace it. In that situation, since they came to replace your broken furnace, that's going to be treated as a repair. Again, repairs are taxable to the customer, and new construction is not. I already gave an example for both construction and repair that's going on there. Again, if you've got some repair going on in the other room of your home, that should be taxed. Those bills should be itemized to list out the type of work that's being done. Again, some other language that's used here, considering repair and other construction-related activities. Repair, we're looking at restores an existing structure back to operable conditions, so it's working properly. Terms that are used with repairs: mend, restore, maintain, replace, or service. This is something that can be a gray area, definitely. This is subject to interpretation on a lot of things. You can't just all of a sudden look in a book or look in the manual and it'll say, this is taxable, this is not. If you're in doubt, you can always treat this as a taxable repair. If it's found later that this should have been treated as exempt new construction, the purchaser that paid the sales tax, they can submit a claim for refund to the department. And if we agree, we'll certainly give them back a refund of the sales tax that they paid. New construction work can also be connected to any of these things listed over on the right-hand side of the slide. Altering an existing structure, rebuilding a damaged structure, adding a new room, putting on an addition, those types of things can all be treated as new construction. Mixed contracts. I have to admit, I haven't received a question on this in just a little while. This is a situation where a mixed contract where there is some construction work going on, and there is also some tangible personal property being sold as well. So in this situation, the contractor, they're considered the consumer of construction materials and supplies, and they are considered the retailer of any tangible personal property, machinery, equipment that is not part of the real property. How this works is on the construction services, the tax is owed on all the construction materials that become part of the structure. Again, I'm not assuming that there's a designated exempt entity or anything like that going on. So just assume it's a normal construction contract. No sales tax is charged on construction services. We've already discussed that. If there is some tangible personal property involved, the contractor must purchase the tangible personal property tax exempt for resale. Then they must charge sales tax on the tangible personal property. And they also must charge tax on any installation charges associated with that. If you have tax included in the sales price, that's fine. It's going to be subject to sales tax. If it's separately itemized, it's going to be taxable. If it's an enumerated services, it may be also exempt if some other type of exemption does apply. An example of mixed contract, think of construction of a hotel. Possibly the contractor is going to build the hotel and they're going to furnish it. The construction part follows construction rules. The furnishings, the TV, the bed, the nightstand, the tangible personal property that's in each room, that's going to follow just regular sales tax, sales of tangible personal property. Designated exempt entities. I wanted to make sure we touched base on this. Contractors that do work for a designated exempt entity, they can purchase their materials tax exempt for that specific job if they have received a designated exempt entity exemption certificate from the sponsor. This also, they do not have to pay tax as well if they withdraw materials from inventory to use in this type of project. Again, thing to keep in mind though, you have to have received a designated exempt entity exemption certificate from the sponsor. Who is a designated exempt entity? These are listed on our website. You can find these. This is an example of some of them. This is not all of the designated exempt entities. Basically what we're looking at here, nonprofit schools, nonprofit private museums, governmental entities, Habitat for Humanity is another one. There are others listed as well. Check out our website. Designated exempt entities are only the ones that are specifically listed as designated exempt entities. How this works is the designated exempt entity is going to register with the department. They can go through GovConnect Iowa or GCI, as was mentioned earlier. In this situation, they're going to register the contract with the department. They will then complete special exemption certificates to give out to each contractor or subcontractor that has the certificate and the authorization letter. The contractor or subcontractor will give a copy of their certificate to their material suppliers, and this will allow them to purchase and not pay sales tax on the materials used for that job only. Couple keys there: they can only buy materials for that job only. Cannot use them for other purposes. That's not an authorized use or acceptable use of a designated exempt entity exemption certificate. One thing why we have this designated exempt entity exemption certificate, in a situation like this, there's going to be no tax included in any of the contracts. So that means the contractors are going to bid a lower amount. They don't have to take into account sales tax on the cost of their materials. There's also no need to obtain contractor statements after a project is completed. and there's also no need to apply to the department for a refund of the sales tax paid. I don't know if any of you have been around for a while, the Iowa contractor statements. That used to be the only game in town years ago. That can be a challenge to complete sometimes and have all your documentation. So what this does, the designated exempt entity exemption certificate avoids all of those things. So there are some benefits. Again, it's up to the designated exempt entity on how they want to do things. Whew. Okay. Hopefully I leave Nick enough time here. So I'm going to stop sharing and I'm going to turn it over to Nick Belke for the final portion of our presentation here today.
Thanks, Terry. Hopefully you can see my screen. I can't tell. I'm not super. Matt, can you give me a thumbs up if you can see my screen? Okay, cool. Great. Okay. Hi, I'm Nick Belke. I'm a policy director with the Iowa Department of Revenue, working in sales and property tax. I wanted to point out one quick thing that I dropped in the chat, not the Q&A, that maybe we should start with for those of you who are less familiar with navigating the Iowa Code and the Iowa administrative rules. So, all of these positions and these instructions are based on Iowa law, and Iowa law to us, of course, is made up of the Iowa Code and the Iowa administrative rules, and of course any court's interpretations of those statutes and rules. And I dropped a couple of links in the chat there that should make it easy enough to navigate to the Iowa Code and the rules. If you don't know the difference, the Iowa Code those are statutes, so those are laws that are passed by the Iowa legislature and generally signed into law by the governor. That's usually how that works. And then administrative rules are passed by an agency with some legislative oversight, and they're meant to implement, interpret, and administer the tax laws. So there's just a couple of quick points on some of those citations that you're seeing in the slides. And I do encourage you, if you go back and watch this recording, or if you have specific questions on a slide, to jump in and take a look at the relevant statute and rules. So with that, I'll get started on my substance. So I'm going to be talking about landscaping, lawn care, and snow removal services. Okay. So hopefully the slide switched. I've had problems with that over the last couple presentations. So landscaping, lawn care, tree trimming, and removal services are subject to Iowa sales and use tax under Iowa Code Section 423(2)(6)(a)(b). So entities providing these services are required to obtain a sales tax permit and remit sales tax to the department. Also, we'll talk about this in more detail. Landscaping materials used in providing landscaping services and sold to final consumers are subject to sales tax as well. Snow removal services, however, are not a taxable service in the state of Iowa. So now that we know landscaping services are subject to sales tax, let's talk about what landscaping is. So under Iowa Administrative Code Rule 701-211-24-1B, that's where the department has defined landscaping to mean landscaping includes services related to the arrangement or modification of a given parcel or tract of land so as to render the land suitable for public or private use or enjoyment. With that said, there is an exception that's worth noting. A service that is required to be performed by a landscape architect who is registered under Iowa Code Section 544B.2 is not subject to tax if the service is actually performed by a registered landscape architect and the charge for the service is separately stated on the invoice and separately billed to the customer. Okay, so that's landscaping. Again, landscaping services they are, like Terry and Matt mentioned earlier, they are one of those enumerated services in statute. So one of those specifically, explicitly um, um, articulated services that are subject to sales tax in Iowa under 423(26) AB. The entire sales price is subject to tax there. And again, the folks who are providing these services have to hold a sales tax permit. You can apply for those via the GCI process that Matt mentioned earlier, and you've got to collect tax from the final consumer. So the final consumer in this situation, that's going to be the owner of the land to which the landscaping materials are applied, or a general building contractor when the landscaping contractor contracts with the general building contractor. And we do have a link here at the bottom of this slide related to sales use and excise tax on landscaping, lawn care, and snow removal and tree services here too. So I'd encourage you to check out our website guidance related to these services. And then, of course, the rule there at the bottom is also relevant. Okay, so landscaping materials. We've talked about services and the fact that these services are subject to tax. Well, landscaping materials can also be subject to tax. What are landscaping materials? Again, we're jumping into the relevant rule. That's Iowa Administrative Code Rule 701, 211, 24, 2D there at the bottom. And landscaping materials include sod, dirt, trees, shrubbery, bulbs, sand, rocks, wood chips, and other similar materials when used for landscaping and sold to final consumers. One thing that does come up with landscaping is sometimes these purchases are made for resale. We have a sale for resale tax exemption in the state of Iowa. So in that case, you know, if a landscaper was taking that exemption when they purchased the materials, they would charge sales tax on the labor plus materials to the final consumer there. Let's see, what else do I want to say about this slide? We've got a few examples that are worth mentioning. So let's say a sodding contractor agrees to furnish and install 20 yards of sod for a lump sum. The sodding contractor must charge the customer sales tax on that entire lump sum. Another example, Company A enters into a contract for the landscaping of an existing office building. Company A agrees to furnish shrubs, white rock, and wood chips. Company A also contracts to install all of the landscaping materials for an hourly fee. Company A's hourly fee is taxable in this case. Another example, if the contractor charges separately for a service, this isn't really an example, it's a point to be made, but if a contractor charges separately for a service that's not taxable, that charge is excluded from the tax because it was separately contracted for. I think Terry had a couple of examples that apply that rule. Also, a landscaping company is not required to purchase products for resale. If the landscaping company pays sales tax to its supplier for supplies, it must still charge the customer sales tax on the entire amount of the services that the landscaping company provides. I mentioned the sale for resale exemption. If you want to learn more there, check out Iowa Code section 423.3 subsection 2. Okay, so landscapers performing construction-related projects. Any portion of a landscaping service that includes labor and materials to erect a structure is considered construction contracting and not landscaping service, and is generally exempt from sales tax. Structures include such items as retaining walls, lawn lighting systems, lawn irrigation systems, pools, walkways, and any other permanently attached item to realty or real estate. It's got to be permanently attached in order for this rule to apply. For this exemption to apply, the invoice must state the charges for the construction contracting separately from the landscaping charges. So you've got to pull that work out there on your billing. More on that point. So if the invoice includes charges for both construction contracting and landscaping services, the entire charge is subject to tax if you keep that combined there. So I think that point was probably made on the previous slide, but keep moving. So what is lawn care? Again, this is another one of those specifically enumerated taxable services under our Administrative Code Rule 701-211-24-1B. Lawn care includes, but is not limited to services related to mowing, trimming, watering, fertilizing, reseeding, resodding, and the killing of weeds, fungi, vermin, and insects that may threaten a lawn. These services are taxable regardless of the age of the person providing the service, and we do include a non-exclusive list of locations where this taxable service can take place and still be subject to sales tax. So that's cemetery grounds, golf courses, parks, and residential or commercial properties as well. Got a couple of billing examples. They're in a little bit of an awkward place in the presentation. That's my fault, so I apologize. But I mentioned the sale for resale exemption. So this first billing example is an invoice to a customer when the retailer claimed the resale exemption on the purchase of the products used in performance of a service. To successfully claim that exemption, the retailer's required to itemize the invoice to the customer here. So we can pull out the taxable items here. So you can see the labor charge, chemicals, and fertilizer all here. Hopefully you can see that. It's not too hard on your eyes. Relevant administrative rule, which I don't have on the slide to look at, related to the resale exemption, is 701-225.3, and that articulates this requirement to itemize the invoice to the customer. That's 701-225.3. Short on time, so I'm going to keep moving. This second invoice is an example of an invoice where the retailer did not claim the resale exemption on the purchase of products used in performance of a service and paid tax on the chemicals and fertilizer from that last exemption at the time of purchase. So here you can see they kind of just bundled it all up together and charged sales tax. Okay, we're going to talk about tree trimming and removal as well. Another specifically enumerated service subject to sales tax. And we're going to look at Rule 701-211-24 sub 3 related to this taxable service. So tree trimming and removal is the removal of any portion of a tree in whole or in part, including branches, trunks, and stumps. Our rule says that this includes the trimming or removal of any shrub that has a woody main stem or a trunk with branches. Additionally, the sale of wood derived from the service would be a sale of tangible personal property and also subject to sales tax in Iowa. And finally, I promised to talk about snow removal services. Easier one. So not an enumerated service. So snow removal services are not taxable in Iowa. So a seller's charge for the service of snow plowing, sanding, salting roads or sidewalks or parking lots is not subject to sales tax. With that said, don't forget about the taxable TPP, so salt, sand, brine, other similar materials used during snow removal is tangible personal property and subject to tax. Also, tools and equipment used for snow removal like plows, shovels, and snow blowers are also taxable as tangible personal property. And the service provider is the consumer of the TPP that it transfers to the customers with such services and is liable for the sales or use tax on the purchase of such property. So I've got a couple of examples really quick to articulate that point. So let's say person A contracts with company X to have its driveways and parking lots plowed and sanded during the winter months. Company X charges person A by the hour. No part of the charge by company X is subject to sales tax. However, company A must pay Iowa sales or use tax on its purchase of the sand used in providing this service. Example 2. Person B contracts with company Y to have its driveways and parking lots plowed and salted during winter months. Company Y charges person B based on the amount of salt used. No part of the charge by company Y is subject to sales tax. Company Y must pay Iowa sales or use tax on its purchase of the salt used in providing the service. One other really quick note on snow blowers. These could be exempt from sales tax if they're used for agricultural production. And our rule 701-214.1 has more details on that point. Okay, with just a couple minutes left, here's some additional resources for you. So if you have specific questions, I'd encourage you to reach out to Terry's team. Emails there, idr@iowa.gov, and then there's a phone line as well. We also have a sales use and excise tax for Iowa contractors guide. Like Matt mentioned, or maybe it was Terry, or maybe it was both. At the beginning of the presentation, we are actively reviewing this website. I anticipate that it'll be updated in the next few weeks to a month. So it'll be new and improved here shortly. But for now, that guidance is there. So, okay, I'm going to stop sharing my screen if I can figure out how to do that.
Well, thank you so much to Nick, Terry, and Matt for sharing all this information with us today. We had a ton of questions. Unfortunately, we couldn't get through all of them. So as they all mentioned, you are more than welcome to email that email address that Nick had on the screen to talk to the Department of Revenue directly to get some help. As a reminder, this webinar was recorded and will be available to watch on our website or by searching for Iowa SourceLink on YouTube within the next week. As a reminder, Iowa SourceLink does not provide a continuing education certificate for your attendance today. We do, however, send out an email to everyone who participated within a few days after the webinar concludes that you can use as your proof of attendance. The next Iowa Department of Revenue webinar will be on July 9th at noon. The webinar will cover the requirements for filing sales tax for out-of-state businesses. Check out the registration link for more information by visiting iowasourcelink.com and navigating to our tax webinar page. Until next time, thank you again to Terry, Nick, and Matt for presenting for us today, and have a great rest of your day.